Welcome again. We go over study problem 3-2 from chapter 3, page 85 in our textbook. So we already solved the first part of this problem. We came up with the income statement. In the second part, we will come up with the common-sized income statement, and that would be very natural since we already obtained the income statement for this firm. Recall again that in the first part we came up with all these figures, and those dollar amounts are basically what we needed to come up with the basic income statement. Now when we are planning to write the common-sized income statement, we should represent each one of these dollar amounts as percentage of sales figure, and in our case the sales figure is $525,000. So all the remaining numbers in this income statement should be represented as a fraction of our income statement. So therefore, we should represent sales as 100%, and every other number in this statement would be a fraction of this 100%. And because all the other numbers are less than $525,000 of sales, all the figures should come up as less than 100%. So let's start with cost of goods sold. Cost of goods sold show an amount of $200,000, and if due diligence is taken to calculate the percentage of sales, we would see that $200,000 divided by $525,000 would give us the 38% given in this table. The second item would be gross profit, and the amount is $325,000. This number divided by $525,000 of sales will give us 61.9%. So I should make note next to it, because this would be, as we call, the gross profit margin for this firm. So the gross profit margin is simply equal to gross income or gross profits divided by sales. So we should continue, and if we keep up with the same order, we should come across the following figures as well. However, the important one for us is this 13.3%, so rather this figure 48.6%, which is basically what we call as the operating profit margin. And it's not difficult to see that operating profit margin in this case is equal to operating income divided by sales. So therefore, in our example, it would be $255,000 divided by 525, and we come across our operating profit margin. And finally, we should also be able to find our net profit margin, which is basically the last figure in this table, is equal to net income divided by sales. So therefore, the 7.8% comes directly as a result of $145,800 of net income divided by the $525,000 of sales. So these three profit margins are very, very important. You are recommended to memorize these ratios. So the gross profit margin is equal to gross profit over sales, operating profit margin is operating income over sales, and finally net profit margin is net income over sales. And we basically came up with our common-sized income statement, and the question is basically done.